Hey, what's going on, team? It's Ricky with Techwood Solutions. Hope that you guys are all having an amazing Sunday. I'm here with Ismail. A lot of you guys might have remembered him. He was actually just here at the house, and I just brought him over here. We haven't actually filmed the video together. I know you guys like it a little bit more when I have someone else, so it's kind of like, insinuating that it's like you guys when it comes down to the different stocks that I break down. But again, these Sunday stock talks are pretty much just going to be the top 10 stocks that our members that tune on in live see value in. So our goal for you throughout this live stream is, of course, not to see value in every single stock. But when it comes down to, your set criteria, regardless if it's, day trading criteria and or investing, for you to cherry pick out of the 10 stocks, maybe 1, 2, or 3 of those stocks that you actually see value in, and to be empowered to be selective, right? You should not see value in all of them. That's counterproductive to have a, very large watch list when it comes down to filtering through, knowing what stocks to pay attention to and which ones not to, right? So I hope that this video gets you one step closer to your overall goal. If you guys are tuning on in, I have a simple question for you. Where is it? As in what city, what state are you tuning in from? And I'm going to be saying what's up. So make sure you drop a thumbs up if you guys feel like you learned something new. I upload new videos every single day, so also turn on your or subscribe and turn on those post notification buttons. So thick, Rick, what's going on? So we got Bailey, Kevin, Chrome, we got Kevin, Scott, Alex, Joe, TC, Mahalo. What's going on? What is that? Oh, what's going on? That one. Brandon Gonzalez. What's going on? Edgar, JD Smith, Tyson, Chase, Brandon. We got SVT from Los Angeles. We got Will Thompson from Charlotte, North Carolina. Lisa, Savannah, Georgia. How you doing? All right, so we got Frank from New Jersey. We got New Hampshire. Travis, what's going on, guys? Nebraska, Omaha, what's going on? Joe, San Antonio, Northeast Missouri. What's up? What's going on? Cynthia from Yucatan, Mexico. That's actually where Ismail's from. That's where Ismail's from. Is it really?
No.
I have no idea where that's at. London, UK. What's going on, Mohammed? Sacramento, California. Aussie Con, what's up? Houston, Texas, Dallas, Deborah. We got Tucson.
Gilbert.
Where's the Gilbert? Where?
Grace. I don't know.
Oh, Grace. There you go. Gilbert, Arizona, Toronto, Canada, Connecticut, Toronto, baby. We got New York, Ohio, Arkansas.
6.
Alrighty. Well, I really do appreciate you guys taking time out of your Sunday to join us. I hope that you guys learned something new. And let's go ahead and jump right to it.
Justin tuned in for the first time in months.
Yep. So we got Maricopa, Arizona. So again, any stock that you guys would like us to break down, make sure that you guys share it in the live chat. So if you guys are not signed in to your YouTube account, then just make sure you sign on in, and it should actually let you comment down below. So what's going on, Justin? I was going to say something dumb. All right, we got Akshat with ticker symbol MCD. Let's go ahead and break this down. So MCD, this is McDonald's. This is on the day chart. So I really like looking at the overall big picture, right, when it comes down to not just, the past couple of days, not even just the past couple of months, but you can see that we can look back as far as 2019. You can see when it was affected by COVID and that strong recovery. I do have to say, if I were to say, some positive things about MCD, McDonald's stock, is that it's very bullish and it's very consistent. Ever since it began to trade above the SMA line, we've seen it pull back, but it does a really good job maintaining that overall direction. At the end of the day, what's most important is that direction. Now, the question to really ask yourself is, out of all the different stocks that you can swing trade, why is McDonald's your top stock? Is it the consistency? Is it the direction? Or is it the margin, the opportunity cost, right? So if we look at McDonald's, we're using the little trendline tool on the Webull platform, from where we're at right now to making a full recovery, that's about a 3% margin. I do agree with you. I like the direction. I like the consistency. But is it worth it for 3% out of every other stock that is available out there? That's only a question that you can really answer. If I were to ask someone that's maybe super conservative, They might be ecstatic for McDonald's stock. But if I were to ask you, Ish, out of every stock, right, that right now that the market pulled on back, Facebook, Apple, Amazon, all of those, or McDonald's, is this something where you would want to buy the dip and ride the recovery?
No, I'd rather do the other ones.
Why?
Because there's more margin.
Yeah, I mean, it's pretty simple, right? The overall direction is in your favor. You can see that it recently pulled on back. So it is oversold. I do agree with you. It does look like a pretty decent deal. But I would just have to say when it comes down to opportunity cost, the 3% just isn't enough for me. In comparison to something like, Facebook. Facebook on the same chart, it had more of an aggressive pullback. Looking at it on the day chart, it's testing this SMA line. And it might be viewed a little bit more risky, right? Because maybe it hasn't been as consistent. But from where we're at right now, if Facebook were to make a full recovery, that's about nearly a 20% recovery. So if you have $1,000 to work with, do you potentially want to make $30 or do you potentially want to make $200? Yes, Facebook might be viewed as a greater form of risk, but this is why, you get to choose. Do you want to play it more safe? Do you want to play it a little bit more risky? And we're talking about Facebook, so it's not even that much more risky, but you guys get the point, right? There's no right or wrong answer. It really is dependent on whatever it is that you see the most value in. So let's go ahead and move on to the next one. So what's going on? We got Wizard, so I'm actually on one of the lives. Sweet. I appreciate you tuning on in. So let's go ahead and break down. Let's talk about Tesla. I think Ish would have a little bit more of an input on that. So Tesla on Friday had one of its best performing days. So there's a very strong resistance level before at $800.
Yeah.
The previous highs is $900. We were previously very bullish, right?
Yeah.
It's been selling off ever since the peak of January 2021. And it is just now, it was really about a month and a half ago that we began to make and actually indicate signs of higher highs and higher lows. Mm-hmm. Looking at where Tesla is right now, is this a stock that you would want to buy?
No, I wouldn't.
Why?
Because it's overbought. Overbought,
yeah. Yeah, I would view it to be a little bit more on the overbought side. One thing that you do have playing in your favor right now, and I'm sure a lot of you guys, if you guys follow me on Instagram, and if you don't, the link is actually down in the description. Heads up, I only have one Instagram account. All the other ones are fake. But the link should be down below. If you guys don't see it, you guys can refresh the screen. But the thing that's going on right now with Tesla is I'm not too sure if one thing that I just posted on Instagram is that Michael Burry was known as someone that, from the 2008 housing market crash, obviously super successful shorting the real estate market, right? But he took a very aggressive short position late 2020. At least that was what was reported in December. And he was just recently interviewed by CNBC, if I'm not mistaken, and he reported that he has closed his short position on Tesla. This is, of course, something that can act and may act as a further positive catalyst for Tesla. The direction is in your favor, it's consistent, and it's bullish. The price action and just the overall momentum is in your favor. One thing that you have to understand that with Tesla, don't be fooled by its market price in the sense that it doesn't trade like other stocks that are in the hundreds of billions. It does move quite quickly, right? So it's great when it's bullish and it's great when the direction is in your favor. Just make sure that you have the big picture in mind. That if you go into this for a trade because you want to get in and get out and you're going to manage your risk accordingly, then so be it, right? But when it comes down to holding and investing big picture, you also need to understand that Tesla right now is not at the best price point, not even to where it was, a month and a half ago in comparison to 620. So I do agree with Ish that it's not the best deal. And looking at the RSI indicator, again, it's just an indicator which is to be used as a reference, but it's above 70 at RSI, which just indicates that it's a little bit more on the overbought side. The direction's in your favor, it's consistent, and the momentum and the just relevance is here, but is this something that you want to trade or is this something that you want to invest into? And right now, I just don't view it to be the best price, but because it's so relevant, I can see why you would trade it. Do you get what I mean? So that's at least my 2 cents when it comes down to that. Let's go ahead and break down the next one. So this one's going to be ATER. So ATE right away, just looking at it, what would you say?
No.
Okay. Why just explain for someone that's watching this right now, why would this not be something based off of what you know and what you have experienced? Why would this not be something that you would want to trade?
Like for a swing trade, I'd wait for confirmation above EMA.
Okay, and what else?
That's like the first thing I noticed.
But why is this unattractive?
Volume.
The volume is one thing, but why is this unattractive to you? With Tesla, you were more like, no, it's overbought, it's not a good deal. But why is this like a no right away?
I don't know anything about this company.
I would say just looking at it firsthand, I can see, but not just based off of the volume, but how it's traded before. I can see my first impression is that this thing can get manipulated.
Yeah.
And it's also inconsistent. So when it comes down to investing, which your criteria should be more focused on the big picture and being okay with, leaving money in something for a long period of time, this does not show consistency for a long period of time. So you need to make sure that your goals align with the history of the stock that you're about to invest into. Versus, I do agree, if you were to want to trade this, right? Not invest, but trade this. I can see that if it does trade above EMA and when the direction is in your favor, why you might want to day trade it or, maybe swing trade it for a very short period of time, as long as it's still remaining bullish. But as long as it's still trading below EMA, indicating signs of a bearish pattern, meaning selling off, then there's no reason on why you should buy this. Yeah, it's cheap based off of where it was before, but it can be cheaper, just like it was last month, right? Yeah, $8 is cheap, but do you want to lose over 40% of your account or of that position? Because that's where it was a week ago. So don't just think about, it's cheap, because it can easily be cheaper. Direction is such a big focus, regardless if you're day trading something, but especially if you're planning to swing trade or invest. So that's pretty much what I was trying to get from you. Like, why is it just looking at something? Yeah. All right, so let's go ahead and break MRK. So MRK, first impressions. Oh, not this one. MRK. Okay, so this one's a little bit different. Right away, I see a lot of consolidation, almost a very practical, I would call this almost more of a horizontal pattern with a slight, I like that, a slight descending resistance level.
Yeah.
Right?
It gets rejected by the SMA a lot.
Yep, so it's a descending SMA, which is great that you pointed that out. So this moving average, this green line, is great. One of the things that we like to talk about with our Learn Plan Profit group, especially big picture, is that the moving average does a great job pointing out the current direction of that stock, big picture. So you can see right on over here, the moving average was bullish. It was pointing up, indicating signs of an uptrend. But as soon as the overall pattern began to trade below the moving average, it then began to descend. So it's great that we're able to identify the support and this resistance level. So if you want to trade it, you can, but it doesn't make sense to invest in something when the moving average is indicating signs of a descending pattern. So that was a great point that Ismail pointed out. So let's go ahead and move on to the next one. So we got Shopify. I actually really like Shopify. So we always talk about, investing in companies that you believe in and that you use every single day, as long as you still see, them big picture doing well. Would you say Shopify is a company that you would like, if you were to choose 10 different stocks that you would invest to, would you consider this one?
Yeah.
What do you like about Shopify?
Well, other than what you brought up a good point, it's like something that you use, or I know it's used a lot in the e-commerce space. So I know it's like it's a big brand or a big company.
Definitely. What would you say about, would you just want to trade something like this, or would you be okay with investing in something like this?
Okay with investing, holding something long term.
Why? What about it? Why is this not direction, right? So moving average.
Yeah. Indicating
signs of an uptrend. What else right now? Why would you would you consider buying now? Would you consider buying before or later?
I mean, if I can easily say before, I'd write it back down there for sure.
I would really like to buy right here at 282, right? Yeah, I would too.
Yeah,
but
it recently pulled back, and it looks like it wants to start going up again.
Yeah, indicating signs of a reversal, right? So like a lot of different tech stocks, they've been experiencing a pullback, right? Like the NASDAQ market. Now, as of last week, It's been almost establishing a support level. This is why I made the video that I made earlier today. I love to take advantage of deals. And it's great to see the previous highs and where we were. Because everyone always says, and always gets excited when the market is at all-time highs, right? Or when stocks are at all-time highs. I don't get excited, and I'm sorry. I'm not sorry for it, but that's not me. I like to focus on deals. Trust me, I love bullish stocks. I love when they're consistent, but I like deals. That's my third criteria. So I like when they pull back, because if you really think about it, that's when it almost makes the most sense to buy them and invest in them. And that's always what we talk about during our live trading sessions. It's you need to understand the big picture. How many times have you guys made the mistake and you buy at all-time highs? And then what happens after? It pulls on back. When everyone is freaking out because the markets are pulling back, that's when you should ask yourself, is now actually the best time to buy, right? One of the things that Warren Buffett once said is the stock market is the transfer of funds from the impatient to the patient. It's understanding the big picture. So from where we're at right now to previous highs, this would offer about a 17% return. Not bad.
Pretty good.
If you think about it, You put in $10,000, that's $1,000, you could make $170 if it were to play out perfectly. No such thing as a perfect trade, right? But just that's the goal. You put in $10,000, you can make $1,700. If I put in $100,000, I could make potentially $17,000. Think about that. That's huge. By knowing how to identify an opportunity. It's not so much about just what stock to buy, but it's knowing when to buy them. That's why I love making videos when the market's pulling back. Everyone freaks out, but people like you and I that like to prepare for deals like that, that's when it makes the most sense. Let's go ahead and move on to the next one. So we've done 1, 2, 3, 4, 5, 6, 7, just a few more, right? So again, if you guys are enjoying this live stream, please make sure you smash that like button. Let's go ahead and do this one for Justice. So this is PAG, and we got Jay with MRNA. So PAG. First impression. What would you first say about it?
Bullish.
All right, bullish.
Consistently bullish above the SMA. Yeah, it looks great.
Is it a deal?
No, not a deal.
Okay, and it's kind of difficult to see this on the day chart, so we can go closer to the 4-hour time frame. But even then, right, you can see that it's almost at previous highs from where we're at right now. It's not the best deal, right? And out of that's why we're making this video. It's this is the top 10 stocks. Thinking about this, think about this. The next time that you're taking a trade with your $1,000, $10,000, or $100,000 in your trading account, by you deciding to invest in that, you're removing any other option or not allowing any other option or opportunity for any other stock. You're saying that this is the number one stock that I want to invest in right now when you decide to invest in something. So out of every stock that we've just talked about in this live stream, not even just every stock, but just in this live stream, what do you say that this is the best stock? I can point out things right away. I can see by these broken candles that this is a stock that has low volume. I can look at the 1-day, 1-minute chart and I can see right away. I've traded enough that I can see those broken candles, so I can already assume that it has low volume. You can see these broken candles. Looking at it on the 4-hour time frame, I love that it's bullish. That's a great criteria to have. I love that the direction is in your favor, and I love that it's consistent. Great qualities to have in companies that you trade, invest, and swing trade. But we're here to make money. Let's not pretend, right? So why not put your future self or keep your future self in mind and choose to be selective in the opportunities that you choose to take advantage of? And I just wouldn't say, in my opinion, that this would be the one opportunity cost wise that would be my number one pick, right? So let's go and move on to the next one, mRNA. This is Moderna, right, which was very popular during this whole COVID thing.
Little COVID vax.
Yeah, not a bad little dial. Look at that one. We talked about what stock would you have wanted to buy.
All in
at $11.54. Well, who would have thought, right? Just imagine. Just think back. What were you doing on this day?
August
7th, 2019. I'm going to have to go through my camera roll. I don't know what you were doing, but I'm sure it would have made more sense to go all in on Moderna, because from where it's been, let's just do this for fun skis, to what it hit, 1,622% ROI.
In 500 days.
Oh, wait. That wasn't even the highest. My bad. Sorry. I was like, that's actually not as much as I thought. But yeah, my bad. 4,199%.
693 in 2 years.
2 years. Under 2 years.
Yeah.
Not a bad dial. All right, but what about it now? Now.
Recently pulled back.
Yep. So recently pulled on back.
That's attractive.
That's attractive. Why?
Deals, like you were just saying. That's
why. So explaining the thought process behind it,
it's been bullish since.
It's been bullish.
It started pushing up.
Yep.
Obviously, whenever it was.
Indicating signs of an uptrend, consistent. Yeah. Mm-hmm. Would you say that this stock moves in a conservative way or in an aggressive way?
I would say aggressive, no?
Correct. Yeah. I can and everyone has a different way of viewing things, right? But I can see the way that it pushes up and the way that it pulls on back. It moves aggressively, and that's not a wrong thing for you to
preference.
Yeah, it's just that you should take that into consideration, because you want to know how much money to put behind a trade. And if it's riskier, then maybe you want to put a little bit less money behind it. Not because you want to make less, but because you need to manage and mitigate risk. You can't glorify and just think about all the upside and profit and not take into consideration the potential for loss. Every trade, it doesn't matter how much money you made last week, yesterday, last year, doesn't matter. Every trade is a new opportunity. And it doesn't matter who you are. They each come at their own form of risk. So I love how much it's pulled on back, because from where we're at right now, it at least makes it attractive that at least there's some upside margin if it were to recover. 37%. But what's one thing that we would need?
Confirmation.
So what does that mean?
Above the EMA. I put a little light position, 10% of your account or whatever you're trading with. And
then
add more as it continues to rally.
At the end of the day, we want to put money into stocks that are indicating signs of an uptrend. And this is great because this is a good deal, so you might want to go in with 0 to 10%, but you're only going to want to add more when it's making you money. So make sure that you understand that. We'll set an alert on both sides. I want to set an alert if it breaks below. I like Moderna. If it breaks below the moving average, but I also want to set an alert if it breaks above the EMA. If it begins to indicate signs of an uptrend, great. If it breaks below, then we'll follow up with it. Alrighty. Alright, so please do Fiverr. Oh, Ish loves Fiverr. Here we go.
Upwork more.
Well, no, it's Fiverr has been a very bullish stock. Look at this, right? And when it comes down to wanting to decide what companies to potentially want to invest in, let's talk about it. This is Fiverr on the day chart. What would you say is maybe not... What's your first impression of it? There's a lot going on.
Yeah, it pushed up aggressively from the $20 to...
I would call this a pandemic stock.
Yeah, that's right. It did.
You could see that.
Yeah.
Yep.
Yeah.
Fiverr did very, very well during the pandemic.
Zoom kind of. Right?
Exactly.
Yeah.
Shot up, peaked, and has been kind of struggling to recover ever since. But what I see, it's hard to look at this when you have this to look at.
Yeah.
So it's almost like it's I think called technical paralysis when there's too many indicators, too many lines, right? Even just looking at this with two indicators can be viewed kind of overwhelming. One thing that I can notice right away is just going back to the very basics. What are the very basics of trading? Support and resistance. I see a very common support range around 185. I see a very common and conservative resistance range not just now, but even before, 240. We could see here, right, when it used to trade around that. So from where we're at right now, if it were to recover, a goal is something to work towards, not something that has to play out every single time. That's about 30%. 30% just to that previous resistance level. But again, it doesn't have to just stop there. From where we're at right now, let me go ahead and delete. Let me delete that. Why is it doing this? All right. From where we were, or where we're at, if it were to make a full recovery, which is very hopeful, but if it were, 72%. Not bad. 30% realistic, 72% hopeful. I would say that other than the moving average acting as a current resistance level, right? I would see why you're paying attention to this. I would just be very careful with the resistance at the moving average. I would love to see Fiverr recover, but again, it peaked with demand levels during pandemic conditions. That was like unprecedented demand. The entire country and world was, disrupted. So now it's asking the question, can Fiverr ever get to that same demand? Question to ask yourself, right? But regardless, I like the support level. I like the resistance level. Let's go ahead and just do two more. Two more, and then we'll call it a live stream. What do you guys think about that? All right. So let's start seeing. If you guys want me to break down your stock, make sure you share it right now. I'm going to pick the next two right now. All right. So we have a couple of you guys. Here we go. I want you to pick the last two.
Damn, I can't even see him moving too quick. Oh, take it easy, fellas. I'm trying to read one.
You blind or what?
Dude, every time.
It's looking at the matrix.
Saw one, SOFI.
SOFI. We have all these people in the live chat, yet not enough likes. It's weird.
Yeah.
I would think that if you wanted me to break down your stock, you would drop a like as well.
Like should be pumping if I'm in this video.
Yeah, of course. You're not going to drop a like for this guy? Sheesh. SOFI, I want you to pick one more. We'll pick one more in just a second. So oh, that's not it.
I was like, oh no.
Yeah, no. I wouldn't touch that one. All right, SOFI. This one's also a little bit different. Yeah, I would say this one's easy to see that it's overbought. It's bullish. It was bullish. It looks like it's already peaking. Based off of the MACD, it's kind of like flattening out, meaning that it's losing its momentum, and the RSI is already curling over, insinuating that pullback's set to come. And not just based off of indicators, but based off of previous patterns. It rallies, it peaks, and then it pulls on back. It rallies, it peaks, and then it pulls on back. So the overall direction is not in your favor, which doesn't provide that much confidence or reassurance behind that stock. I would say that it's bullish. If the direction continues to be in your favor, then great. But if it begins to so on the 4-hour time frame, it'd probably be a little bit more clear. If we begin to trade below the EMA line, I would call it quits, expect that pullback, and stay away from it. So let's go ahead and do one more.
SOFI, as long as people can make their payments. Pinterest. All right. My girlfriend's favorite app.
Yeah. Wrong one. Alrighty. So I've been watching Pinterest for some time, and I'm actually invested in Pinterest. So one of the things that I want to share with you is by telling you guys I'm invested, I want you guys to know, this is my 2 cents, I would not buy Pinterest if I were you right now. Unlike other people, right, when they're invested, they try to encourage their followers to copy.
A little pump.
Yeah, it's like I like to be open and I like to look out for the beginner traders. Here are the reasons why I would not buy it right now. I'm sure Ismail can point them out.
Struggling to go above the SMA.
The moving average, it's trading below. It is making lower highs and lower lows. In very simple words, you're not missing out on anything. Yeah. Why put money in something that is not indicating signs of an uptrend? I'm okay because I did it with a tasteful position. And what I mean by that is it's a dollar amount that I'm okay with having in it. And if it, when it does begin to recover, that's when I can step on the gas and really begin to add more to my position. But as of right now, it's selling off. It's cheap, but it could be cheaper. The reason I find Pinterest to be attractive, can you guess? All right, guess how much it would offer in a recovery, percentage-wise.
I don't know. Quick 300?
No, not 300.
I don't know.
Well, from where we're at right now, if it were to recover to, the peak, 55%.
Dope.
Not bad, right? It's very attractive, but we have a lot to prove. So I am trying to encourage you as a beginner trader, right? If you are so certain that the stock is going to recover, I challenge you to wait for indication of a recovery. Do your future self a favor and only put your money in companies that indicate signs of an uptrend. One of the main reasons, right, that I began to trade TQQQ is I like to buy the dips, but I really like to step on the gas on stocks and ETFs when they begin to indicate signs of a recovery. So when TQQQ began to trade above the EMA and began to actually indicate signs of an uptrend, that's when I stepped on the gas. And then it pushed up and then became a little bit on the overbought side. The MACD began to descend. And I was like, okay, maybe I'll lock in some of my profits and then I'll wait for a pullback, right? It's understanding and having a reason behind everything it is that you do. That is our goal, to put you in a position. Imagine this. You might be an absolute beginner watching this live stream, but the more that you do something, the more comfortable you're going to get. And the goal with anything is not to be perfect, but to get as close to perfect as possible. So my goal for you is to build this solid foundation and this general understanding of what to do and what not to do, and to have a reason why in doing whatever it is that you decide to do. So regardless, if you make a mistake, you'll learn from it. But if you do not understand what you are doing and you make a mistake, you feel like you got robbed. Why? Because you put yourself in a position that you didn't know what you were doing, right? You had no understanding of your potential. You had no understanding of the risk involved. And that's one of the worst feelings. So my goal for every single one of you is to make sure that there is a why behind every trade and opportunity you choose to take advantage of. How amazing would that be? For you to be well-informed enough, it's not perfect, but well-informed enough to have a reason why you take a trade. Your buys, your averages ups, your sells, your cutting losses. Risk is part of the game. Don't be scared, be prepared, right? And that's our goal. Every single day, you are presented new challenges and new opportunities. It's your job to put yourself in a position to understand which ones are worth taking advantage of, right? What do you guys think about that? I have a challenge for all of you guys tuning on in right now. First off, like you guys know, you guys have to destroy that like button. But for those that are watching this and that are new to trading, if you're an absolute beginner, you should see it in the description. It's my Instagram. Again, I only have one Instagram account. I have 189,000 followers, if I'm not mistaken. My challenge for you is to message me tonight when you're seeing this. And if you want to tune on in to our live trading session tomorrow, it's tomorrow at Market Open. I trade live every single day. And if you want to tune on in tomorrow and you're ready to actually have a reason why behind every trade that you take, I want you to message me. I respond to all of my messages, and we can get you to join that live trading session tomorrow. But again, you guys have to refresh your screen. The link is in the description, and it's just my Instagram. Send me a message, live trading, that you want to tune on in tomorrow at Market Open. I appreciate you guys' time. I hope that we earned your thumbs up. I hope that we covered some of the stocks that you guys see value in. And I hope that you guys enjoyed Ismail joining us here.
Rusty-ish.
Rusty-ish. You guys can call him that now. I appreciate you guys' time. Like always, continue working hard, continue following dreams. Let your passion be what drives your success. And like always, let's make sure that we end the year on a green note. Take it easy, team.